It's about that time of day again here, boys and girls. Welcome back. Welcome back. Newsletter time. JJ here. Tuesday evening, January 27th, 2015. We are cruising our way through here this fourth week of the month of January. Hope you guys are staying warm and staying dry out there. I know that it doesn't sound like we got as clobbered as we were thinking. You know, I think that's the word to describe it, right? Clobbered. They were describing it as being a clobbering, right, of that northeast coast here in the U.S. Well, it looks like you guys are getting the snow, but it may not be as bad as they initially thought that it would be, right? The kids definitely, I'm sure, had a good day today. That's for sure. We had a great day today. Hope you guys had a great day as well. One good thing about the weather outside is all we need is a laptop and a wireless connection or an internet connection, and that's all we need to get to the exchange. All right, let's jump right in, though, for this newsletter. Tuesday evening, 27th of January. Before we jump in, I want to remind you guys, make sure you're watching this video on our trading blog here at sidewaysmarkets.com. If you're watching the video right now on our YouTube page, we got a great YouTube channel, as you guys know, but follow the link below the video in the description of the YouTube video. It'll take you over here to our blog page. 3 reasons why you should be watching this video on our blog right now. 1, you can download all my charts for today. 2, you can grab yourself a free pass to come out in the $10 trade room as a guest. If you're not a member of School of Trade and you're wondering what it feels like to be a member of our trade room, I'd love to give you a free pass on your free trial. And of course, third thing, lower left-hand corner, right above my ugly mug, you'll see a spot there for your name and your email address. That's so you can register for our nightly newsletter mailing list. And I'll send you an email every evening when this newsletter goes live. Guys, just a quick heads up, if you join the free pass or if you register for the mailing list, I'm going to send you a verification email. Make sure we get the right email address, and to make sure, of course, you give me approval to keep sending you this newsletter every evening. So make sure you check your email, especially your junk, spam folders, right, things like that. All right, guys? Ready to rock and roll? Helmets on, seatbelts fastened? You can take the boots off now. Well, unless, of course, you're going back out to shovel. Remember, shoveling is a very, very good exercise. Okay, I heard it's like running a marathon or something like that, right? As if that makes it easier to do, right? While we're at it, we'll go mow the lawn, right? I'm sorry. Let's get right into it here. On the Russell. Now, we knew this Russell was going to be a bull here, right? So we talked about this last night. Last night, my exact words were, don't you dare buy those highs. Wait for the pullback and buy the pullback. Well, if you waited to buy the pullback, you got paid well today. In fact, if you got aggressive and sold off that high, you got paid double today, right? So the buyers who stayed patient, the buyers who listened to me last night, I don't want to toot my horn, but I'm starting to toot here a little bit, right? But if you listened to me last night, you waited for the pullback, you waited for it to pull back. I've updated this chart. But, you know, we pulled back into this 85 area here, and then here we go on the way up. So bottom line right now, if you're late to the party, you missed it, okay? If you missed the buy on the pullback, you missed the move, okay? No big deal. It's a great thing about being a trader. Trades are like buses. You miss one, just hang out. There'll be another one coming right around the corner. We have some very, very big clues right now, though, as we go up to these highs. And just looking at this chart right now, we can definitely tell, again, we got reason to believe here, we're probably going to finish the move up to that high. We're kind of stuck around this 1200. We got some good targets waiting for you here right now overhead. So if we do happen to push higher here, those are my targets waiting for me. But honestly, guys, I don't think we're going to make that next leg up, at least not tomorrow. And here's basically where if we do pull back, you're going to get a couple more chances here to be a buyer. Okay, so you'll get a few more chances here, 1185.2, 1179.6. But be careful for tomorrow, because when we go to the next chart here now, so we're clearly bullish. We're still going to stay to the bull side right now, but be careful buying these highs. Wait for a pullback. And here's why. We dig down a little bit deeper here. Here's my 16 anchor chart on my Russell. You'll notice very obvious trading range. Okay, this came back, pulled back today, right? So this was our area here we outlined last night, right? This was our buy area that we gave you last night. So it pulls back right into the buy area, then takes off to the upside, and then you can see here A, B, C, D, right? That's where we start getting our targets overhead. So we are definitely locked and loaded here for some bulls to continue this move higher. Again, if you missed it earlier today, buying down at this 1185, you've got two spots here that you're going to get a chance. You're going to get kind of a second chance on this. But I want to bring your attention to the volume, because right now the volume is screaming at us, stay the heck away from these highs. Well, if you can do anything up here, sell these highs. So I would definitely be looking here for a short off those highs, but I'm going to want to see it try to make the move higher and then fail. I wouldn't go selling until you get above, what I would expect is overnight here, we get a little poke above 1200.4. Okay, maybe we run up to the top of the high of that channel, whatever it is. But again, right now, and this volume is usually pretty darn accurate. The only thing that might happen is we may get something overnight, right, that changes the personality, right? Maybe there's news that comes out that gets people thinking that all of a sudden we're not as, it's not bearish, but we're just not confirming the bulls yet. So be careful of the highs. Definitely wait for the pullback, wait for the buys down here. That's definitely where we're going to continue here, but be patient right now. Okay, be very careful as we push higher here overnight. I personally would recommend you stay the heck away from those highs. Okay, and what I would look for a short is if it goes up, a little pullback, right? What will happen is you'll see this act as support, right? So it'll pull up, pull back, and then if it fails, that volume is your reason why. Okay, so you might get a little bit of a blow off, so to speak, up towards the highs and then get it selling back down. Just be aware though, if you do try to sell the highs here, you are going to be trading counter trend. The easy money here will be to stay patient. I know that's not easy to stay patient, but that's where you really want to be allocating your risk capital right now if you're trading those small caps on the mini Russell. How about some price action? Okay, Russell price action is clearly bullish. We got higher highs, we got higher lows in the long term, but in the short term, you'll notice again, kind of the same thing we just saw here. We really haven't. I'll tell you, that's not screaming bullish. I'll tell you that much. That is definitely screaming range. So this looks like we have a trading range to work with right now. Okay, 1200 down to 77.3, maybe all the way down to 81, but I would definitely say the lows of the range here, those are going to be your real important levels here. Just like that. Okay? So either way you slice it right now, we're up near the highs of this range. So once again, I'll say it again, careful at these highs right now. You're better off to be a seller here than being a buyer, and then we'll look for a buying opportunity at the 1190. That'll be the first opportunity to be a buyer. Look for another buying opportunity at the low of that channel, another buying opportunity at the 81.9, and then last but not least, another nibble on the long side there at 1177.3. Okay, so you can see we've got plenty of opportunities here to be a buyer here. And remember, we're not just going to blindly buy, right? I don't just blindly buy this 1190.9. What am I going to do? I'm going to look for the proper entry pattern and the trigger. See, the reason why we use a slower time frame for overall areas and direction, it tells me if I'm looking to buy or looking to sell. Okay, so I know from this chart that I want to be a buyer. I also know where I want to be looking for a buy. The keyword is looking. Okay, I'm going to look for more proof. So what's the point of a pattern? The point of a pattern is nothing more than to give me the ability to calculate my risk and my reward on that trade. That's the point of the pattern. Okay, most of the reason why we trade a pattern is to give me a way to manage my risk. That's it, right? Because I can't just buy, because then, okay, how low will how far against me will I let it go, right? If I buy without a pattern, I haven't defined how far I'm willing to take in the red before I say mercy. Okay, that's what a pattern does. It gives me the ability to calculate risk. Okay, so we got the range. Sell the highs with caution because the bulls are in control. I know I've been talking about selling these highs. Just remember, you will be counter trend if you sell these highs right now. Okay, looks like you should be okay to sell these highs, but just again, you are trading against the trend, And so take that money quick, lock up that profit, tighten down that stop, and then hold on to this sucker down to these support levels that we have listed below. All right? And then we'll look for those buying opportunities down at those lows tomorrow morning. All right? There's your mighty mini Russell. Let's keep on cranking. Now, boy, we are on a roll here. We nailed the Russell last night for the buy. And I'm sorry, but this is as good as a winning trade as far as I'm concerned. What a great call. That volume was so accurate yesterday. Remember last night in the newsletter, we said, all right, we made that low right about last night, 24 hours ago. We were down around those lows, and we looked down bottom, and we saw the volume didn't confirm. And we said, all right, be aware it's probably going to sneak back inside that range. That's exactly what it did. Now, we are in an area, there was a sell zone up here. We tried to find a couple options to get short off that sell zone, but nothing triggered. It's just kind of chopping around up here. So we're waiting. As of right now, when we sit inside those zones like that, that's enough for me. I'm done. I'll remove that zone, and now I'm going to wait. I'm going to wait to see if price wants to go higher, and we'll definitely keep looking at selling these highs. So gold, I'm not going to say we're not bearish still. We're definitely on the bearish side. In my opinion, we got that channel. The channel was a little bit too easy not to say that was the bears in control. Anybody can put together a one-day rally, okay, even gold. Okay, so in my opinion, that's a one-day rally. Let's see if it can hold and keep going higher. Usually what happens is we get these one-day rallies, these break of the channels, and then we end up going right back down to where we came from. So keep an eye right now. Here's what I would be looking for on the gold. There are two ways for me to get short. The first way is the obvious way. We go up, we test resistance, we look for a reversal pattern or a continuation pattern after the reversal, and we sell it off the highs. Option number one is to sell it at the highs of this range. That's option number one. But option number two is one of my favorite ways to trade, and that is think about where, now remember, we're trying to go short here, so think about where the buyers might try to get long. And if they were to fail, where would that probably occur? What will probably happen is we'll probably pull back a little bit. You've got this, what we call a reversal line here, give or take a few ticks or two. We'll say 1286, right? So right around that, probably closer to 1286, 1287. Okay, so we got that little support level there. So I would expect the majority of the buyers to be looking to buy on this pullback. Well, I'll tell you right now, if they fail, that's where you're looking for the failure. You're looking for those buyers to exhaust. And then you'll get a couple big wicks, right? You'll get a couple of those reversal candlesticks, and that will tell you those buyers have failed. Okay, a little bit more advanced, but boy, is it powerful. So what I want you to think about right now is there's two ways for me to try to capitalize on this bearish trend. The first way is to sell the highs. Okay, and I've given you guys a few different options here, 97.9, 1300, 1303, 13058. That's option one. Option two would be the buyers try to get long here, and when they fail, right, we got them, and we sell it right back down. Okay, second option is definitely most powerful, but it's going to be a little more advanced, right, because you got to know what a buyer failure looks like. Don't forget, I open up my trade room tomorrow morning at 8 a.m. Eastern Time. You're more than welcome to come in and join me, and I'll show you exactly how it's done in real time, how we see these buyers fail, choosing the right candlestick patterns to trigger the entry on the failure. Okay, let's keep going. We cut that 32 anchor in half. Here's down to my 16. So now we get a much better looking view here. There's that bear channel we were talking about, right? There's that bear channel. There's that one-day rally. Okay, remember, we didn't have a lot of volume confirming last night, so we knew the party was done to the downside, and the buyers just took it from there and brought it up. Now here we are testing that overhead resistance, and we see we have a lower high in price. Now, this lower high in price doesn't really mean a lot to me right now, but it's definitely not a bad start. So I can see this little triangle we have going here, right? Little wedge, little triangle. Okay, so this is a clue that tells you that we're going to get a break up or down. Once this thing gets really narrow like this, get ready. It's either going to break down or it'll break back up again. Okay, another option is it may go sideways because we are running into rollover. According to my calendar, 01/30/2015 is rollover on the gold, and that's going to take us here to the 04/15 contract. So we're going to be starting to see volume slow down a little bit here on this funny yellow metal they call gold futures towards the end of this week here. And of course, tomorrow's FOMC day, so wouldn't surprise me here if we get some slop and chop here tomorrow during the day. Shouldn't last very long, but again, what I'm looking for right now is I am looking to sell at these highs. So gold is bullish in the short term, but the recent lower high, okay, tells us this bullish party is likely over for tomorrow. So look for selling opportunities below that 1289.5, right? We make a run for the lows. Selling below 1289.5. I've got targets waiting for you down here. 1, 2, 3 targets. Looking good there. Okay, if you're shorts. And again, don't be surprised if we end up going sideways. If we go sideways tomorrow in this range, okay, buy the lows, sell the highs for the highest percentage trades. And then if we do happen to jump up, you got one more level up top here we're looking to sell. If we do happen to jump up. I don't think we jump here overnight though. Right? If I take my gut instinct right now, my gut says tomorrow's FOMC announcement, it's probably going to have us going sideways, if anything, going lower, right? Going lower here. So look for those sells on gold overhead. Wrapping up here on gold, we get our price action chart. Gold price action is bullish, but will it last? The buyers had fun with it today. You can definitely see that. We can see that strong bullish channel on this chart. Real easy to see that channel. But what we see though is we notice buyers are unable to make that new high late in the day. After that channel break, these buyers are going to try to run this baby up again. The psychology behind this is pretty simple. What happens is you've got rookie and retail traders that will see this channel. They'll come in late to the party. They see the broken channel, and they will undoubtedly buy this thing. If they're strong enough, they'll get it back to that high. If we get back to that high, price will go most likely up to that 1304.8. So here's the deal. If for some crazy reason here overnight, we get those buyers back in control, if we get back to that high, all of a sudden now we are bullish going into tomorrow's session. Okay, but if we don't get back to that high, if we see a lower low here, guys, you are on the sell side here. So right now, pay close attention. If we retest the high of 1297.3, we are now bullish and expecting us to push higher. If we do not test that high overnight, which is why I can have this buyer's failure here, all of a sudden now we are very, very bearish, and we got targets waiting for you down bottom. Target, and target on the gold. Okay? So keep an eye out right now on this gold. And again, don't be surprised with FOMC tomorrow afternoon. Don't be surprised if gold is a very challenging range-bound market here for the next 24 hours. Okay? Looking good here. Moving forward here on crude. Now, I wanted to continue with this 64 anchor. This is a pretty slow chart here. Really important for tomorrow here on crude. I wanted to show you here. We have this bear channel. It's very easy to see. Okay, unless you've been living under a rock the past few months, you don't know about this bearish trend. So we definitely know we're bearish here on crude. I have this extension, this measured move extension out here that puts us right about 40.73. Right? 40.73. That's where if this thing lights on fire tomorrow morning or tomorrow afternoon after that FOMC, that's where our FOMC target's going to be here for tomorrow. That 40.73, right? That will be where you'd expect this price to go if we get that runoff tomorrow after FOMC or, before FOMC. But usually the night before FOMC, usually everybody kind of chills out a little bit, lets this thing do what it wants to do, and then tomorrow, once we hear from that news report from Washington, we'll be a lot better equipped here to see some moves here. So didn't see any volume at those lows from yesterday. We are definitely trading sideways here with a bearish tone. So tomorrow, just again, be aware. If we make a run for it, we're going to go to that 40.73. If we do head overhead, if we do go higher here overnight, I've got that 48.05, 50.16, 51.61. Those will all be excellent areas to sell short here on crude. Okay, you can download this chart for tomorrow. You'll have that for you tomorrow as well. Moving from the 64 now to the 32, here's a better look at that short-term channel. Okay, now we zoom a little bit closer on that short-term channel, and we can see here A to B, C to D, A to B, C to D. So we got plenty of reasons to take some profit off down here at 44 to 43.27. And we've got some areas to sell overhead, 46.55, 47.03, 47.75, 48.05, 49.04. And if we happen to make a big run, 50.16 to 50.90 overhead, right? So we're going to continue to sell short on this crude, but remember to stay patient. If you stayed patient, like I said last night, if you stayed patient, right, it ran it up, and you get another great sell off that high. So the secret to success right now on crude oil ain't no secret. It's just keep marking those highs, keep marking those resistance levels, and stay patient for the price to get to it. That's the tough part right now. So if you missed the sell off the high, last night I told you guys, be ready to sell those highs. If you missed that sell off the high, well, you got to wait one more day or one more time for them to retest those highs here. Now here's a relatively interesting chart. Crude oil is bearish in the long term, but sideways with kind of a bullish tone to it here in the short term. You know, the last 2 days have been relatively bullish here on crude, but really all it's done is just put us up at that high each time. These last 2 days, we've seen excellent sell, and sell opportunities here on crude. So again, even though we have been moving higher here, we stay focused on that sell side because of that long-term trend. Now, looking again at the volume right now, we saw a new higher high in today's session. We look down bottom, we see the volume here. The volume says we should still be trading sideways. Okay, look at that. Volume does not go higher with the higher price. So that tells me that the buyers got a little bit perky out there. They pushed it up. They ran it up pretty well today. But it looks like at this point it's just speculation. And so what I would do right now is really focus on this range right here. Right? Focus on that range right there. Range highs, range lows. So you got that 40, 46.66, 46.50 down to 44.39. Right, that'll be your most important range here. So what's the plan for tomorrow? Well, the plan right now is you can buy these lows. Just be aware you're going to be trading counter trend. Okay, so if you want to buy this trend line, right? You want to buy this support. Just be aware it's counter trend, so it's going to be likely rolling over. So make sure you take some quick profit, tighten up that stop, and lock up that money before it rolls over on you. The easy money, like we've said here for the past 6 months, is just simply waiting for price to make its way to a high and then sell it right back down, right? So selling at these resistance areas overhead, right? That's where we're going to be really focusing our energy on right now. So I've given you plenty of areas overhead to sell short. Plenty of areas below for some counter trend scalps to get long. Again, just be careful though. If you do get long here on crude, take that money quickly, take that profit and tighten up that stop so you're not left holding the bag here as you go into tomorrow. Well, crude, you're spoiling my fun right now. I was going to wrap things up by saying look to sell that 46.21, but we never even get a chance. Look at this. Now this right here tells you that all we did was run this sucker up just to sell it right back down. I mean, this really confirms. So look at this crude oil price action chart. We finished the day with the bulls clearly in control. When the closing bell rang today, we were right inside this channel. Right? But that doesn't look like it's going to last, does it? So what I was going to tell you, literally, I just got this chart done about 15 minutes ago. What I was going to say was you know those buyers are going to try one more time. They are most likely going to try to retest that high. And I was expecting to get a nice little tasty sell there off that 46.21, but you can see, oh, sorry about that. Sorry for the blizzard. Oh, I don't mean to say the word blizzard. I don't want to strike I want to strike a nerve there. Sorry about that. But bottom line is, though, I was expecting this to go up and then, bam, right back down, selling that 46.20, but that does not look like that's going to be the case here right now. We're still going to leave it there, but now what I would do is add that on something like this. Now remember, there are a few ways to sell. I can sell with a move back up, a reversal pattern, and then get short, right? I can sell at a resistance level. Another way to sell would be to wait for the buyers to try to push this higher, and when they fail, we sell from there. So don't forget, it's two ways to get short. I can look for a selling pattern, or I could look for a failed buying pattern here on crude. Bottom line right now, you've got 3 levels overhead that you can look for your sell side here, and we are right back into that trading range. Boy, this really spoiled the fun here tonight in this newsletter finishing up. This trading range we knew would be a magnet, right? Look at all this chop and slop here. Guys, when you see consolidation like this, when you see this narrow chop, 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 that basically tells you that's an acceptable trading range. And the minute that these buyers lose control, we're going to go back into that range. Okay, so right now, breakout retrace, sell that high at 45.53, target down at 45.90. And then I would expect here this evening, if we get into this range, I would expect here sell the highs, keep selling that high, but I would expect us to get stuck inside this trading range ahead of tomorrow's FOMC report tomorrow afternoon. All right, guys? So stay to the bear side here. I was going to say look for a short-term rise and then sell it back down, but that clearly is not the case right now. And newsflash, we are still bearish here on the black gold, right? As much as the OPEC cartel is trying to beat that fear drum right now about rising prices, right? They were saying, yeah, we should be about 55 to 60 here, and I'm going, really? Have you looked at a chart lately? Have you actually seen how weak to the upside it is? You're kidding yourself right now if you're thinking 55 is going to be where we're going to settle in here right now. Not the way it looks right now, OPEC. And again, I've been saying this for a while now, but is it just me, or we just do not see people taking OPEC very seriously right now, right? Ever since this little snafu a few months ago here, where now it's pretty much falling apart. It's like, OPEC who? Who? As far as I'm concerned, the little tiny shell farmers here in the U.S. have a lot more pull than the OPEC countries right about now. Yeah, if you don't believe me, we'll see where it goes the next few weeks here. So look for the buyers to try and look for them to fail so we can get short. Look to sell, sell, sell at these areas overhead. And if you got a chance here tonight, you're probably going to get a chance here to take a little breakout retrace back into that range. All right, guys? Careful tomorrow afternoon. Tomorrow's FOMC announcement at 2 p.m. And remember, guys, don't forget, you do not have to do this on your own every day. Come out and see me tomorrow in the trade room. I'll walk you right through what I'm seeing. I'll use all 14 and a half years of my experience of watching these charts to help you understand where we're going and what the plan is. Guys, I want to remind you here, don't forget, take me up on my offer here this evening. Download those charts. Grab your free pass. Register for the nightly newsletter. And don't forget, guys, we have the best trial on the planet. Okay, this trial took me 6 weeks to create. I'm going to teach you guys my 7 days to trading success. I'm very proud of our free trial. Okay, this is the one time when you do not get what you pay for. You're going to get a whole lot more, I'll tell you that much. for free 99. And you're going to learn all about how we trade here at School of Trade in that free trial. So come out, join the free trial. While you're here, check out our 3 levels of membership. And if you need us, don't forget, we're always here to help with some live support 24/7, 365. All right, guys? Have you picked your team for the Super Bowl yet this weekend? You know who I'm rooting for. Go Patriots, baby. Go Patriots. All right, we'll see you guys same time, same place tomorrow. Stay warm, stay dry, be careful out there as you're working the snowblower. Okay, keep off those streets. You know who you are. Be safe, be well, and we'll see you guys tomorrow, 8 a.m. Eastern Time, opening up my trade room, 8 p.m. Eastern Time, back here for my newsletter. Be well, everybody. My name is Joseph. Adios, amigos. Bye for now.